Hello everyone, welcome to this midweek technical look ahead of Easter holidays, and today we're going to have a look at dollar yen, gold and dollar index. So starting from dollar yen, we can see that the market rebounded off the almost 6-month low at 141.60 after the strong selling interest that we had yesterday, and the next resistance is coming from this inside swing low at 144.55. Even higher, the market it may challenge the 20-day SMA at 147.10 ahead of the next peak at 148.15, which holds near this short-term descending trend line. So a climb also above the 50-day SMA, which lies around the 148.60 level. The next battle will come from the 200-day SMA around 150.35 ahead of the 151.15 region. So a movement above this area here within the 200-day SMA and this barrier, then the market it may switch to a more neutral one. Now to the downside, a drop beneath the almost 6-month low, the market it may retest the 14-month low at 139.56 taken from this trough here back in September of 2024. Having a look at the technical oscillators, they both looks to be oversold and the market is in the technical oscillators are turning higher. The RSI is pointing up near the 30 level and the stochastic is ready for a bullish crossover within its percentage K and percentage D lines below the 20 level. So both of them are suggesting that we may see some more gains in the market. Now turning to gold prices, that it reached another all-time high above the 3,350 region and is currently retreating slightly above this area here of the psychological level of 3,300. Now a move below that area, it may take the market towards the next support, which is taken from the 261.8% Fibonacci extension level of this down leg here from 2790 to 2535 at 3200. Even lower, the previous peak at 3167 may halt downside movements, but if the market retreats within this upward sloping channel, then it will continue this steady upward movement. However, if the market falls beneath the 3,000 round number, then it may create some steeper decreases and we may have a bearish correction maybe between the 2950 and the 2880 support levels before meeting this long-term uptrend line near the 2830 area. Now to the upside, if the market continues the buying interest, then next resistance will come from the next round numbers such as the 3400 and 3500 ahead of the 423.6% Fibonacci extension at 3600. Now the RSI is pointing downwards in the overbought area and the stochastic is flattening above the 80 level, so we have an overstretched market here and we may see some losses in gold. And also having a look at the US dollar index, that is hovering above the 3-year low of 98.75 and also is holding beneath the 100 round number. The market looks to be in a strong bearish tendency since the beginning of 2025. More losses may take the market towards the 97.70 region, but if there is a climb above the 100, then the price it may test the next resistance at 101 taken from this inside swing low. Even higher, the 20-day SMA around 102.25, it may pause the upside movement, but there is also a strong resistance area between the 103.30 and this bearish crossover between the 50 and the 200-day SMA is near the 104.35 and this short-term downtrend line. The RSI is pointing slightly up near the 30 area. However, the MACD is still strengthening its negative momentum below its trigger and the zero lines. So we have some mixed signs from the technical oscillators. So we have to wait to see if the market will climb above the 100 level or if it will create a new low. So that's all from me. Thank you for watching and have a great day.